So Andrew, recently FHFA gave permission to Freddie Mac to start buying second mortgages. Pilot program. Pilot program. And I think you and I may be having a little different viewpoint as to whether this is good or not. And I'd love to hear your uninformed viewpoint. No, it's an informed viewpoint. I know it's good.
So let's talk about what's good about it. $1 trillion in potential mortgages. Then actually, if they're going to have success, Fannie Mae is going to be like, okay, great, let's do it. And then maybe it could also extend to Ginnie Mae. So maybe we'll see it on FHA VA loans. Those seem like good things, right?
Yes.
Okay, good. So what I'm scared about is all of that money being injected into the financial system when we're trying to control, an overheating of the financial system. I don't know that this is the best way to do that.
Well, are you talking about an overheating of the overall financial system, or are you talking about an overheating of the housing market?
Well, overall financial system, the Fed has held back on lowering interest rates because they're trying to cool the economy.
Yeah,
you inject $1 trillion worth of actually new money into the economy. Now, well, yes, maybe it's good to help people that are paying 30% in credit cards, accessing some of actually their equity, but. Right. But this is like the last bit of wealth that some people have. They're going through their savings, they're driving up their credit cards, and now actually we're going to access the last bit of wealth that they might have using a government-backed program.
So hold on. I'm just kind of curious.
I remember this. But yeah, I don't know.
First off, it's a pilot program, so it's not. You're not taking all of the $1 trillion or trillions of dollars available in seconds that are out there and putting them all through one thing and saying it's all that money's out there now.
Oh, this is great. We love this free money. Well, not free money.
No, it's not free money. It's not.
We love this easy money.
It just makes it easier for lenders to be able to take these and make them for folks because they've got now an outlet for selling this stuff, which is probably not a bad thing when so many people's net worth is in their homes and they can't get
so we're going to rob
access to it.
So what do you think?
It's not a rob it. It's not robbing it.
They're going to take this.
They can go.
They'll pay their credit cards. Then they're going to get hot tubs.
If people want a second mortgage, they will go find one. But what they're going to find right now, because they've got the equity, they're going to go find somebody that's going to lend it to them. But you know what they're going to find right now? They're going to find few choices, and those choices are going to be more expensive. A program like this will make it more broadly available to those people who are going to find it anyway. They're going to find it anyway. It's going to bring the cost down.
As a mortgage industry, we're going to make
it will bring the cost down. They're going to promote it. Of course, promoters are going to promote it.
So, but you don't
because it's going to replace
the injection of $1 trillion.
I'm not all that worried about that. I'm not worried about that because, as you already alluded to, what it's going to do
power of the Fed, it's in their ability to kind of control and make actually smart decisions.
We're not taking away.
And we put the power in let's call it a presidential appointed position.
You are so off the mark on this thing. That is not that's not what's going to happen here. I understand what you're saying.
This is a great year to do this, by the way. Not to get into politics of this, but
if the notion is
all about politics here.
To give people more access to their own assets, and let them make their own determinations what they're going to do with it. I think a free market person like you has generally like that.
Strategy worked really good in 2008.
But what we're going to say instead is, hey, folks who want to redo their kitchen or do some stuff and they're determined to do it, if they can't get access to second mortgages, and most of them can, they're just going to get them at higher rates. What are they going to do? They're going to pad it out, as you already indicated right at the top of this program, with credit card debt. And that credit card debt isn't coming at 8, 9, 10, 12, 13, 14%. It's probably going to be at 30%.
They're paying
so they're going to do it anyway. You're simply going to replace high cost debt with lower cost debt. And that's better for consumers.
The credit card debt is going.
That's why we're doing it as a pilot program to see what happens.
We didn't
just open this thing up. Well, if all of a sudden everybody took on excess debt and couldn't pay it back, if it did cause a ramp up of inflation. If it
You
causes
mean
these
if
other
it's
things,
successful, if people actually use it, that say, oh wait, people are actually using it. No, it's not going to work like that.
we have leaders, former presidents, some hope soon to be president again, who big proponent of debt, got lots of debt, says this is the way to do it. This is how you grow. Now you're saying average Joe shouldn't have access to the same tools that stronger financial
give them access to the tools.
But no, you just don't give them access to the actual loans.
Don't give them access to the loans that come out of our butts to be able to using government-sponsored tools.
Government-sponsored to make it less expensive for them. And again, a pilot program.
This is not going to end.
I think your thing is we either do nothing or we just jump in to the water wholeheartedly. That you never test to see what's going to happen. Listen, I don't think testing is bad.
I'm going to let you win on this one because I can't wait to come back actually and show you how wrong you were. So you got to win on this one, and we're going to come back next year to show how wrong you were. So winner, winner, I'm going to eat the chicken dinner.
Jeez, okay.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.